Okay, so let's be real. Most of us think that getting rich in the stock market means you've got to be some kind of genius, right? Like you're glued to charts all day or you've got this sixth sense for finding the next apple. But what if I told you the best way to build massive wealth is, well, to be kind of lazy about it? A strategy that takes almost zero effort.
And hey, don't just take my word for it. This quote comes straight from the man himself, Warren Buffett. Just arguably the most successful investor in history. When a guy like that boils it all down to something this simple, you gotta listen up. It's a pretty huge deal. All right, so let's just rip the Band-Aid off and talk about this myth head on. You know the one that investing is this super complicated, high-stakes game that's only for the experts on Wall Street. And that idea, it's exactly what keeps so many of us frozen on the sidelines, just too scared to even get started. But what if that whole idea is just wrong? Seriously, what if the most powerful strategy isn't about being frantic or having some secret knowledge? What if it's actually about embracing a little bit of, laziness? This is the key right here. It unlocks a completely different way of thinking about building wealth. So how does this whole lazy thing actually work? Well, it all boils down to one simple concept, the index fund. And I know, it might sound a little technical, but trust me, it's way simpler than you think. The easiest way to picture it, just think of it as owning a basket of stocks.
Okay, so here's the official idea. Instead of spending all your time and energy trying to find that one perfect egg, that one winning stock that's going to make you rich, an index fund just lets you buy the whole basket, all of them. See, you're not betting on just one company to succeed. You're betting on the entire market to grow over time. That diversification is just built right in. Let me give you a perfect example. One of the most popular ones out there is the S&P 500 index fund. When you buy into one of these, you instantly, and I mean instantly, own a tiny piece of the 500 biggest, most successful companies in the US. Think about it. Apple, Microsoft, Amazon. You get a piece of them all. Your success is literally tied to the growth of the whole US economy. It really is that simple.
Okay, and this is where the story gets really interesting. It's kind of the most surprising part. How is it possible that this passive do-nothing approach doesn't just work, but it actually beats the people who are paid millions of dollars to do this stuff for a living? How does that happen? So why is just holding the basket a better move than hiring some high-powered expert to pick out the individual eggs for you? The answer? Well, it's both super simple and kind of shocking. It's because even the pros, the experts with all the fancy degrees and all the resources in the world, they consistently fail.
Get ready for this number, 90%. Seriously, just let that sink in for a second. 90%. Because this one statistic, it completely changes the entire investing game. It turns everything we thought we knew on its head.
That's right. Over the long haul, more than 90% of professional, highly paid money managers fail to do the one job they're hired to do, which is to beat the average market return of the S&P 500. They spend all day, every day trying to outsmart the market, and almost all of them just can't. And just look at this chart. This is what it looks like in the real world. Over 15 years, the simple, boring S&P 500 index fund just completely blows the performance of the average active fund manager out of the water. It's not even close. It's the perfect illustration of how by trying to do more, they end up with so much less. So let's just recap the advantages here because they're huge. First, index funds are super low cost. We're talking tiny fees. Second, they're incredibly low stress. You're not losing sleep over some bad news from a single company. Third, as we just saw, they actually outperform the experts. And finally, this isn't some new fad. This strategy is historically proven to work, decade after decade. Okay, so just owning the market is already a massive win. But that's not even the whole story. We haven't even talked about the secret sauce yet. The real engine that takes this whole thing and turns it from a simple savings plan into an actual wealth-building machine. And that engine, it runs on something called compound interest. This is the real magic ingredient. It's the process where your returns start earning your own returns. Your money starts making money for you, and then that money starts making even more money. It's like a tiny snowball at the top of a huge hill. As it starts rolling, it gets bigger and faster. And with enough time, it becomes an unstoppable force. So, how do you build this money-making machine? It's actually super straightforward. Step 1, you just invest consistently. Put money in regularly, even if it's a small amount. Step 2, you let the market do its thing and grow over time, which it has a great track record of doing. Step 3, you take all those earnings and dividends and just reinvest them right back into the machine. And what happens? Step 4, your machine gets bigger and more powerful, and the whole process just starts to accelerate year after year.
And that's it. This is the ultimate set it and forget it strategy. It's true passive growth. You just get the system started, you keep feeding it a little bit regularly, and then you step back and let it do all the heavy lifting for you. It literally becomes a machine that is working for you 24/7, even when you're sleeping. All right, let's wrap this all up and talk about your simple path forward. If there's one thing you take away from all this, let it be this. Building real, lasting wealth does not have to be complicated. In fact, most of the time, that extra complexity is actually the enemy of getting great results. When you think about it, you've really got two paths you can take. There's the old way, full of high stress, paying crazy high fees to managers who don't even beat the average, and basically just relying on expert guesswork. Or there's the simple way, the lazy way. Low stress, super low fees, and a plan that's just tied to the proven long-term growth of the whole market. The choice seems pretty clear, doesn't it? So here's the bottom line. If you're ready to start building toward financial freedom, but you want to do it without the nonstop headache and anxiety of day trading, then index funds are going to be your new best friend. Seriously, it's a strategy that works with your life instead of taking it over. And so I'll leave you with this one final thought to chew on. When you finally embrace simplicity, when you stop trying to outsmart everyone and just let a powerful, proven system work for you, is it possible that your financial future isn't just brighter, but maybe, just maybe, it's a heck of a lot closer than you think?